Okay, good evening, everyone, and welcome to another session, another 123 Forex session, where we're looking to pick trading issues and then look to solve. Um, we normally do this every week on Sundays, where we pick a topic, try to solve. The most important thing there is that we're trying to be better traders. We're trying to see how we could get better. We're trying to see how we could be much more profitable day by day. Can you guys hear me? And as usual, it's lovely to always have you guys. For those that be watching this video on YouTube, please like, or you can pause, like, subscribe to the page. And if you don't want to miss any class, you can just check um the description. You would see a link to our group where we drop signals, not just signals, but then links to all these classes. Now, without further ado, let's get started. Today, and if you guys look at the notification for this class or for this meeting, the topic there was market structure, how to know when to buy or when to sell. Now, this thing is very, very important because as I'm on my charts like this, I think everything that comes to a trader's mind is okay, I know that people are using this thing to make money, but then how can I also use this to make money? When do I look to buy? When do I look to sell? That thing is very, very important because we don't want a situation whereby we decide to buy here and then price keeps going down, or we decide to sell and then price starts reversing to the upside. So that's the essence of this topic. So at the end of this class, or for those that are watching this video on YouTube, at the end of this video, you should understand when you should look for buys or when you should look for sells and not be confused when you come to your charts. You know which opportunities you look out for. So now you're not moving blindly in the markets. So I'm going to share my screen and then we get started. Um, can you guys see my screen? Please, if you can see my screen, drop emojis in the chat section, please. Okay, good. Okay, good. Okay. Let's get started. Let's continue basically. So, like I said, what we're going to be looking out for, or what we're going to be looking to solve today, is the whole issue of when we should look for buy opportunities and when we should look for sell opportunities. And what is going to solve that issue for us is market structure. So, market structure by definition or by description is basically how the market moves. It's basically how the market moves. Now, it's from this understanding of the movement of the market that we get to look at price and then be like, okay, with this movement, it's better for me to look for buy opportunities. And then with this movement or with this certain type of movement, it's better for me to look for sell opportunities. Are you guys getting the whole idea? So, when it comes to these movements of the market, we have three types. So, at any point in time you come to your charts, price is going to be doing one of these three movements. Now, what are these types of price movement or types of market structure? We have an uptrend, which can also be called a bullish trend. We've got a downtrend, which could also be called a bearish trend. And then we got a range. Or some people call it consolidation or ranging markets to get. So these are the three ways price moves at any point in time. Now safe to say that, or I just want to say something. So if I come to my charts, one sec, trading view. If I come to my charts, let's say I open NZD USD at any point in time, it's not like price is going to be doing all those three movements. Price is going to be doing one, just one. Do you get? And it's what that most recent movement is that will basically make my decision on or with. Do you understand? So there's no need going back. Do you get? It's the recent market structure that I'm going to use to make my decision. Now, if I go back, I can see where maybe price did other price movements, but then the most important one or the most important thing at any point in time I come to take my trade is what price is doing currently. So now we'll look at what an uptrend is. Do you get? We'll look at what a downtrend is. We'll look at what a range is. We'll not just look at what they are. We'll also look at how we can use these things to trade. We're not just looking at them for looking at them sake. Do you understand? We're not just looking at them because we want to talk about them or because we lack what to talk about. We're looking at them because we want to use these things to basically know when we should look for buy opportunities or sell opportunities in the Forex market. Are we on the same page, guys? Please. Are you guys with me? So, before we continue, I just want to emphasize on something. So I'm going to write here, please note. Please note that price will never move in any direction in a straight line. Price will never move in any direction in a straight line. But price will always move in series of impulsive moves and retracements. Of impulsive moves and retracements. So, what does this mean? If we look at these charts I pulled up just recently, yeah, if we look at this chart, you see that from one sec, let it load. Um, oh, why is this chart? Oh, good. From like here to here, price has been moving to the upside. But then if you look at this, you see that price didn't just move in a straight line like this. There are moments where price pushed up, there are moments where price pushed down, there are moments where price pushed up, there are moments where price pushed down. Now, if we even look at if we look at this place here, price was pushing to the downside. Here, one sec. If we look at here, you see that price was pushing to the downside, but we not just push down in a straight line. Are you guys getting the idea? So it's something that is very, very important for us as traders to understand that no matter the direction price is headed towards, price will never move in a straight line. But then price will always move in series of impulsive moves and then retracements. Now, what are impulsive moves? Now, impulsive moves are strong moves in the direction of the trend. And retracements, on the other hand, are weak temporal moves against the trend. Are you guys following? So, like I said, while look no matter which direction price is going towards, price will never move in a straight line. Price will always move in series of impulsive moves and then retracements. Impulsive moves and retracements. Now, we're going to talk about how this thing plays out on our charts, yeah? Whatever trend we pick to look at, we'll look at, okay, these impulsive moves and then retracements. Now, another thing I want to say is that whatever trend we want to look at, please try to understand, first of all, let me write this somewhere. Try to understand. This also is going to be whatever trend we look at.
Yeah, give me one shirt. I'll be my go
Try
answer.
to understand. Understand, first of all, what it is,
Yeah,
what it
white
looks
one.
like, and then how to use it to trade. Now, this thing is very important. Why is this thing very important? It's because if we say, okay, we're looking at an uptrend, if you don't understand what an uptrend is, you'll not be able to even know what it looks like or how to use it to trade. Let's say you know what an uptrend is, but then you don't know what it looks like. Even if you see it on your charts, you'll not be able to use it to trade. Now, let's say you know what it is, what it looks like, but then you don't know how to use it to trade, it's going to be a problem. So even when you identify it, you not know, okay, whether I should look to buy or whether I should look to sell, or when you should look to buy or when you should look to sell. So it is important that whatever we pick to look at, try to understand what it is, what it looks like, and then how to use it to trade. And if we pick anyone and you don't understand it, please let me know. Do you guys understand? And then just write which one is actually a problem for you. And then when it comes for the time of questions and answers, we'll take a look at it. Are you guys with me? So let's look at an uptrend.
You're looking for answer.
No, I'll use black uptrend. Now, an uptrend is a market condition where price is moving up. Where price is moving up. Do you get? But then, if you look back to what we said here, price will never move in any direction in a straight line. But then price will always move in series of impulsive moves and then retracements. Now, what are impulsive moves? Strong moves in the direction of the trend. So now the direction of this trend is to the upside. So we are going to have a strong move in the direction of the trend. After that, what are we going to have? A weak temporal move against the trend. Now, the direction of this trend is to the upside, so anything against it is to what? The downside. Now, this movement to the downside is weak and then temporal. Another impulsive retracement, impulsive retracement, impulsive retracement. That's how an uptrend moves. Now, these moves to the upside are impulsive moves. The moves to the downside are retracements. Now, these impulsive moves and retracements in an uptrend go up to create a series of higher highs, higher lows, higher highs, and then higher lows. So, higher high, higher low, higher high, higher low, higher high, higher low, and then higher high here. So HH is higher high, HL is higher low. Are you guys getting the whole idea? So HH higher high, HL higher low. Now, like I said, we're not just looking at this thing because we want to talk about it. Do you understand? We're looking at it so that we can look to trade. Now, an uptrend is a market situation whereby price is pushing up. Now, we're looking at it so that we know whether we should look to buy or whether we should look to sell. Now, whenever you have an uptrend, look for buy opportunities. Now, I want to say something, and this thing is very, very important. Look for buys and look for buy opportunities is not the same thing. Now, let me explain. If I say look for buys, it means that whenever I see an uptrend, just jump in and start buying. Do you understand? Or buying an uptrend, it means that whenever I see an uptrend, start buying. But then if I say look for buy opportunities, what that means is that whenever I see an uptrend, you're trying to look for the next best place for you to buy. Do you understand? You're looking for those opportunities to buy in that uptrend. You might have an uptrend, price might do an uptrend, and then you might not see an opportunity to buy. Are you guys getting the whole idea? So you don't just dive in and then start buying in an uptrend. You look for buy opportunities instead. Now that's what we're going to break down. Rules, uptrend rules. The first rule I want to talk about is that before you can call any high a higher high, before you can call any high a higher high, before you can call any high a higher high, it will need to break above the previous one. That's the previous high. What do I mean? If I have price pushing to the upside like this, price creates a higher high or price creates a high. Now, price starts pushing back up. Before I can call this move to the upside a higher high, it will need to pass this one to the upside. That's this last one. It will need this new one now pushing up. We need to pass this last one to the upside. Now, if it doesn't pass it, then it's an equal high. Now, what confirms this break? That's what confirms that price has passed the previous high. What confirms the break is a close of a body of a candlestick above the previous high. Now, what do I mean by this statement? As price is pushing up like this, as price is pushing up like this, we have candlesticks going to the upside. Now, let's say we got a candlestick here and a wick passes this high to the upside and not the body of the candlestick. That is not a break to the upside. This is still an equal high. Before I'll confirm that price has broken above and created a higher high, I'll need to see price do something like this. Now, this candlestick's pushing to the upside. I need to see at least one. Let the body of at least one break above or close above this previous high before I can call this new movement or this new high here a higher high. Are you guys getting the whole idea? So in a case where I see a long wick, even if the wick is very, very long, we still have an equal high. Before we can confirm that price has created a higher high, it will need to close. It will need to break above the previous one. Now, not just any break, it's a body of a candlestick. We need to close above that previous high. Now, the next rule we're going to talk about in an uptrend is that we need to pay attention to higher lows in an uptrend. Pay attention to higher lows in an uptrend. Now, this our uptrend example now. Yeah, this uptrend. We have series of higher highs and higher lows. Now, all these lows here are higher lows. We need to pay attention to them in an uptrend. Why are we paying attention to higher lows in an uptrend? One, first of all, that's where we're looking to buy from. Now, what do I mean by that's where we're looking to buy from? Whenever I have an uptrend where price is creating series of higher highs, yeah, and then higher low, higher high. Now, I can decide to buy at this higher high, but then you just have to know that price will go down first before pushing back up. Now, this price going back down like this, especially on something like gold, Before it goes back up, maybe you lose your whole account. So instead of jumping on it when price starts going down, let's wait for it. Let price do that retracement. At the formation of the higher low now, I can look towards, buy from there, and then follow price to the upside because it's from there that price starts moving to the upside. Do you guys get the whole idea? So the safest place for us to get that buy opportunity is at the formation of a higher low or of the higher low. Now, the second reason why we're paying attention to higher lows is because in an uptrend, if you see price break below a higher low, that's price push up, creates a higher high. As it's coming down, it fails to create a higher low and it breaks below a higher low. We have a shift in market structure. Let me put that down. When price breaks below, one sec, a previous or any higher low, the previous higher low to the downside in an uptrend, we have a shift in market structure. A shift in market structure. Now, what do I mean? Let's say we're having an uptrend where price is creating series of higher high, higher low, higher high, and then price starts retracing to the downside. And instead of stopping to form a higher low and push up, price breaks this last higher low to the downside. This whole act here, this whole behavior of price here, is what we call a shift in market structure. Now, what does this shift in market structure mean? That this is no longer an uptrend. This is no longer an uptrend, and we stop looking for buy opportunities. This is no longer an uptrend. We stop looking for buy opportunities. Now, mind you, I did not say, oh, this is no longer an uptrend, start selling. I said, stop looking for buy opportunities. Because honestly, to be sincere, there are times here you would have price do a shift in market structure and then come right back into that uptrend. Are you guys getting the whole idea? So the safest thing to do is wait and then see what trend price forms next. Do you understand? If it starts maybe doing a market condition that is suitable for us to sell, we start selling. If it doesn't, we leave it alone. Do you guys get the whole idea? So that's it about an uptrend. Now, before we take examples, I just want to do a quick recap. Now, we said an uptrend is a market condition where price is going up. And price doesn't move up in a straight line. Price moves in series of impulsive moves and retracements. Impulsive moves push up to create higher highs. Retracements push down to create higher lows. Impulsive push up to create higher high, higher low, like that, like that, like that. Now, we're looking for buy opportunities in an uptrend because it's a market condition where price is going up. And whenever we buy, we need price to go up before we can make any money. Now, we said that before you can call any high a higher high, it will need to break above the previous high. That's it will need to pass the previous high. And what will confirm that is if we see a body of a candlestick close above the previous higher high. Now, we're also paying attention to higher lows in an uptrend. Why? First of all, that's where we're looking to buy from. And then secondly, if price breaks a previous higher low to the downside in an uptrend, then we have a shift in market structure. That being said, let's jump on our charts and then take a couple of examples. Please, if you have any questions, you can just drop it in the chat box and then I'll look to answer them. Now, I think, yeah, we're having an uptrend here. So, Guys, please just pay attention and then watch how I identify this. So I'm going to start from sure. I'm going to start from here. Now, price pushed from here. Now, watch this. It's the flow of price. I'm not just using one candlestick. So, price moved from here to here and stopped here. Now, if I draw a line here and compare this with the previous high, you see that this high broke above this one. So, we have a higher high here. Yeah. Now, price pushed down to here and we created a higher low. Price pushed up again, we created this high, which was higher than the previous one, so we had a higher high here. Price pushed down, higher low. We pushed up and then we created this high. Now, if you look at it, you observe that I'm starting, like I used to start from down and then go to wherever price stopped before going to the downside again. So price pushes up to create a high, pushes down to create a low. So we have a higher low here, sorry, a higher high here. Price pushed down for a higher low. Price pushed up again and we created this high. Now this high here broke above this previous one, so we had a higher high. Price pushed down and then we created a higher low here. Price pushed up. This high was not higher than this. Do you get? And I think it was almost equal. One sec. So, one sec. Price pushed up to create this high, this low. Price pushed up and did not create a higher high here. I'll just call this maybe an equal high. It's almost equal. And then price pushed down, higher low. Price pushed up again. This high broke above the previous one. So we created a higher high, higher low. Higher high here, higher low, and then a higher high. Now price is pushing to the downside to create what? A higher low. So me now coming to my chart now and seeing this, I'm going to be looking towards buy. Where will I be looking for that buy opportunity? At this point here, we can see that price is pushing down to create a higher low. So at the formation of that higher low, I can look to buy in anticipation of price movement toward the upside. Something like this. Now, this is a clear example of an uptrend. So one sec, let me delete this and then screenshot this. I'm going to screenshot this and we take it to our notes. So we had price pushing from here to here to create this high. Now this high, higher high. Price pushed down, we created higher low. Price pushed up, we created higher high. We pushed down, we did not break below this level, so we still have a higher low here. Price pushed up. I'll call this a small high. I'll just use a small h and then identify because it did not break above this previous high. But if we broke above this previous high or we were equal to, I'll call it an equal high. But if we broke above, we'll call it a higher high basically. But price not break above. So from here to here, we created higher low, higher high here, higher low, and then we have higher high here, higher low, higher high, and then price is pushing down to create what? A higher low. Do you guys get the whole idea? Please, if you're with me, please just indicate in the chat box, please. Indicate in the chat box if you guys are with me, if we're together, before we proceed. Let's not be that you guys are left behind. And please, if you understand, if you get the idea of what we're talking about in this uptrend, please let me know. And if you've learned something new, please let me know. Okay, good. So the next thing we'll look at now would be a downtrend. Now, a downtrend is basically a market situation whereby price is moving to the downside. Where price is moving to the downside. Now, just like we've already established earlier, price will never move in any direction in a straight line. Price will always move in a series of impulsive moves and then retracements. Now, what are these impulsive moves? Impulsive moves are strong moves in the direction of the trend. The direction of this trend is what? To the downside. So we'll have impulsive moves to the downside. After that, we'll have retracements. Now, retracements, on the other hand, are weak temporal moves against the trend. So we'd have weak temporal move against the trend. Impulsive retracements. Impulsive retracement. Impulsive. Now, this series of impulsive moves and retracements in a downtrend creates a series of lower lows and lower highs. So price pushes to the downside, that impulsive move to create a lower low. The retracement goes back up to create a lower high. Lower low, lower high, lower low, lower high, and then lower low. Are you guys getting the whole idea? Now, like I said earlier, we're not just looking at these things because we want to look at them. We're looking at them so that we can know what opportunities to look out for. Now, when you see a downtrend, you look
Oh
for
yeah, you
sell
said that.
opportunities.
Oh.
You look for sell opportunities. Now, why are you looking for sell opportunities in a downtrend? It's because whenever you sell, price needs to go down before you make any money. Now, if you look at this, you see that if I even decide to sell at this lower low where price starts going back up, if this thing continues being a downtrend, at some point I'm going to make what money. But then we're looking for sell opportunities in a downtrend. Now, just like the example of, or just like the uptrend we looked at, a downtrend or our downtrend too has rules. Now, what are these rules? Rules for downtrend, or let me say downtrend rules. The first rule is that before you call any low a lower low, it will need to break, that's it will need to pass below the previous low. So before you call any low a lower low, oh sorry, a lower low, it's well to break below the previous one low. Now, what I mean by this is that if I'm having a downtrend like this, before I can call any low a lower low, it will need to pass this last one to the downside. Do you get? If it just stops here, then it's an equal low. It will have to what? Break below before I can say, oh, this one is a lower low. If you even listen to the name, you hear that the name is what? A lower low. We have a low that is what? Lower. Lower than what? The previous one. Now, what confirms this? What confirms this is a close of a body of a candlestick below the previous low. Is a close of a body of a candlestick below the previous low. What do I mean by that? If I have price create a low and then price goes up and then price starts coming down, candlesticks are pushing down. Before I can confirm that price has broken below this previous low, a body of a candlestick we need to close below. If it's just a wick, then it is still an equal low. Do you understand? But then if I have something like this, sorry, if I have something like this and then the candlesticks pushing down, eventually one closes with a body before below the previous low, then I have a lower low. Are you guys getting the whole idea? Now, that's the first rule. The second rule of a downtrend is that we pay attention to lower highs in a downtrend. We pay attention to lower highs in a downtrend. Now, what do I mean by we pay attention to lower highs in a downtrend? As I'm having this my downtrend like this, all these lower highs are important that we pay attention to them. Now, why are we paying attention to these lower highs? The first reason why we're paying attention to these lower highs is because, first of all, that's where we're looking to sell from. We are looking to That's where we're looking to sell from. What does this mean? As I'm having my downtrend like this, whenever price creates a lower high, lower low, and then price pushes up, or whenever price creates a lower low, lower high, and I come to my charts and see that price is at this lower low here, I don't just dive in and then start selling. Do you understand? Because at this point now, price starts going back up. And like I said the other time, if I sell at this point and price starts going back up, before price would go down, maybe I might lose all my accounts. My accounts might blow. So the best thing to do is wait for price to retrace, go back up. Had the formation of the lower high, because it's from there that price starts pushing to the downside. I would look to sell and look to ride price to the downside. In this case now, if I sell here and price starts going down, I am making money basically. Do you guys get the whole idea? So where I am looking to sell is at the previous lower high. Now, the second reason why we are paying attention to lower highs in the downtrend is because whenever we have a downtrend and price breaks above a previous lower high, we have a shift in market structure. So whenever we have a downtrend and price breaks above a previous lower high, then we have a shift in market structure. We have a shift in market structure. What do I mean by this? As I'm having my downtrend to the downside like this, price creating lower low, lower high, lower low, lower high. Price creates maybe a lower low, even if it's not a lower low, but then price creates a low and then starts pushing back up. And eventually price breaks above a previous lower high. This whole act here, this whole act here is a shift in market structure. This whole thing here is a shift in market structure. Now, what does this shift in market structure mean? That this is no longer a downtrend, and we stop looking for sell opportunities. And we stop looking for sell opportunities. Do you guys get the whole idea? So this is it about a downtrend. Yeah. Now, a quick recap. What we said was that, first of all, a downtrend is a market condition where price is pushing to the downside. But then price never moves in any direction in a straight line. Price will always move in series of impulsive moves and retracements. In this case, impulsive moves to the downside to create a lower low, retracements to the upside to create a lower high. Impulsive to the downside to create a lower low, retracement for lower high. Now, downtrend rules. Before we call any low a lower low, it will need to break below the previous low. And what confirms that break is a close of a body of a candlestick below the previous low. Now, like we were saying, we pay attention to the lower highs in a downtrend. Why? Because that's where we're looking to sell from. First, yeah, that's where we're looking to sell from first. And then secondly, whenever price breaks a lower high to the upside in a downtrend, we have a shift in market structure. Do you guys get the idea? So what we're going to do now is jump on our charts and then take a look at some examples. So let me look for a nice example and then we'll take a look at um, let's see. Let's see, 5 minutes. So, yeah. So we got a downtrend here. Now, if we take a look at this, you see, okay, let me screenshot this. Let me screenshot this and take it to our board. So, copy and delete. Sorry. So some people are joining, so let me let them in. So if you look at what we have here, you see that price pushed from here to the downside. So price pushed from here to the downside. Now this low is lower than this one, so we have a lower low. Price pushed up, we created a lower high. Price pushed down and stopped. Let's see. It stopped around here. So here now we have equal lows here. Price pushed up, we had a lower high. Price pushed down, and we had a lower low here. Pushed up, we had a lower high. We pushed down again. Now, this low broke below this one here. So we had a lower low. Price pushed up, we created a lower high. Price pushed down, we created a lower low. Price pushed up, we created a lower high. Now, price pushed down, and we failed to create a lower low. I'll just call this a small low. Now price pushed up, and as you can see, we broke above the previous lower high. At this point now, we shifted structure. Do you get? So in this moment now, we'll stop looking for sell opportunities. And if you look at this, from the moment we broke above this lower high here, price moved overall to what? The upside. Do you guys get the whole idea? So it was at this point here. One sec, let me use red color to highlight that. This whole no, this is not it. So this place here, that's where we have our shift in market structure. Do you guys get the whole idea? So, please, any questions, like I said, any questions you have about this downtrend, please drop it in the chat box. And then when we finish, we'll talk about it. So if you look at this, you see that we've looked at we've looked at two of the three types of market structure we have. And the only one remaining, it's a ranging market. So we got a ranging market. Let me use another color to highlight this. Let's use black. A ranging market, or a range basically. Now, a ranging market is a market condition where price is not creating new highs or new lows, but then price is bouncing in between a previous high and then a previous low. So, price is not creating new highs nor new lows. It's not creating new highs nor new lows. But it's bouncing between a previous high and new. It's bouncing between a previous high and low. So what I mean by this is we have price creating a high. Sorry, we have a high and then a low where price is bouncing in between. So price is not really exiting it. And some people say this is a market condition where price is moving sideways. Do you get? Now, this is basically what it will look on paper, but then on our chart, sometimes you see that it will look something like this. Do you get? The key thing there is that price is bouncing in between a previous high and then a previous low. Now, this is considered generally as a low probability market condition. Now, what do I mean by a low probability market condition? Neither buyers or sellers will favor you that much. Do you understand? So it's best to sit out. But if you still want to trade it, you can look to buy. So whenever price taps the low, you can look to buy. And then when it gets to the high, exit and then look to sell. Buy whenever it taps the low, sell whenever it taps the high. Buy, tap the low, exit, and then sell whenever it taps the high. Do you get? That's an easy way you can look to trade it. Now, one another thing I'm going to talk about is whenever I have a range, how you know that price has exited that range is, let's say we have a range like this, price is pushing down, pushing up, pushing down, pushing up, and then price breaks to the downside. That immediate break doesn't mean price has changed to a downtrend, and it doesn't mean you should start looking to sell. Wait for price to go back, create a lower high, then create another lower low. So you need to have two lower lows first before you confirm that price has exited this range. At this point now, you can start looking for what? Sell opportunities to follow price to the downside. The opposite is what we have for, or what we will have for an uptrend, where if we have price creating a range and then eventually it breaks above, that immediate break doesn't mean you should start buying. But then wait for price to push down, create a higher low, and then when it breaks above and creates that second higher high, so you need to have two higher highs. At that point, now you can start looking for what? A buy opportunity, because now we've confirmed that price has created what? Or price has started creating what? An uptrend. So from here, you can start looking but to buy towards follow price to the upside. That's how you know price has exited your range. So quick recap, a range is a market condition where price is just bouncing in between a previous high and then a previous low. And it's generally considered a low probability market condition. That's to say that neither buys or sells will favor you that much. But then if you still want to trade it, you can look to buy whenever price taps the low, sell whenever price taps the high. And before you know that price has exited the range, if it's to the downside, you need to see two lower lows. If it's to the upside, you need to see two higher highs. That being said, let's jump on our charts and then take a look at some examples. So, if we look at this place here, to a certain level, we had a range here. So, if you look at from this low here, price did not really break below. And then as price created this high here, price did not really break above until around here like this. Now, let me screenshot this. Let me screenshot this. This is like a nice range. Now, if we look at this, you'd see that price did not break above the high. From like here, price did not break above the high, really. And then from here, price did not break below the low. Now, look at what I was saying about waiting for that proper exit. See as price did as if it pushed out of the range. Imagine you started buying, see price still came back into that range again. So you need to see price create that higher high, higher low, and then what? Another higher high before you confirm that what? Price has exited the range. Do you guys get the whole idea? Now, that being said, we've looked at all the different types of market structure we have, not just looked at them, but then at this point, everybody knows what to do when they see certain types of market structure. If you see an uptrend, you're looking to buy. Where are you looking for the buy opportunity at the formation of the higher low? If you see a downtrend, you're looking to sell. Where are you looking to sell at the formation of what? The lower high. If you see a ranging market, normal, I would advise that you sit out. But if you still want to trade it, you can look to buy whenever price taps the low and sell whenever price taps the high. So after or at this point now, it's expected that, or I'm looking at it that from tomorrow, if you open your charts to analyze your markets or analyze your charts, you basically know what to look out for. If you see an uptrend, you know what to do. If you see a downtrend, you know and you can see it, you can recognize it, and then you know what to do. If you see a range, you know what to do. So all that confusion that comes with You jumping on your charts and not knowing what to do should vanish at this point. And honestly, personally, I'm not expecting that you know all these things from this class alone. You have to go back and then practice. You might even have to go back and then watch this video again. Do you understand? And then practice. Do you guys get the whole idea? And so now, please, if you have any questions, please, you can ask them now. You can unmute yourself as I'll take like three questions or four questions, depending on how many we could get. We'll take them and then we'll call it a day. So, any questions, guys? So, I'm definitely taking the silence as no questions. So, for those that will be watching this video on YouTube, please like and subscribe to the page. If you don't want to miss any of these sessions, you can use the link to join our group. And please, if you are on this meeting and you have not joined the group yet, we drop signals there. We drop these meeting links there. You can use the link. Let me get you guys the link. I'll drop it in the chat box. You can use the link to join. So you don't miss any of our sessions. You don't miss any of our signals. So, that being said, please, everyone, have a very wonderful evening, have a very wonderful weekend, and have a very wonderful trading week ahead. As usual, it's always fun having you guys, and I can't wait to see you guys next week. Yeah, take care of yourselves, guys.